Good afternoon and welcome to Biztech's Asian Midday Market Watch. It's the 5th of December and our guest today is Glenn Yin, Head of Research and Analysis at AETOS Capital Group, coming out to us from Australia. Now, welcome to the show, Glenn, and great to have you back.
Thank you for having me again, Brian.
Now, Glenn, before we get your insights, we're going to take a look and see how markets across the region have performed this morning. We're going to start, of course, as always we do, is the Straits Times Index out of Singapore. That was down 0.33%. Looking across to the KLCI out of Malaysia, it's down 0.37%. Shanghai is down 0.71%. ASX All Ordinaries is down 0.99%. The Nikkei is down 1.18%. The Hang Seng is down 1.71%. Rounding up the numbers, we've got the Kospi, which is down 0.42%. Dismal numbers, a sea of red. Glenn, tell us why.
Yes, Brian, it's a sea of red again. I think it was the same thing happened last time we spoke on Biztech Asia. I think it's because, particularly in Australia, the ASX has taken a very weak lead from Wall Street last night. Sort of people as traders and investment banks are sort of saying that, hey, we're going to take a pause after partying on from Friday Powell's dovish remarks. So we saw the Treasury yields jumping back a little bit, and the indices are taking a step back. So we're taking a very weak lead from there, Brian.
Now, so I want to talk that something that's just, the numbers have just come out. RBA holds official interest rates at 4.3%. Now, what's the market view on this pause? This was obviously largely expected. And is this just a pause before further rises next year?
Very good one, Brian. I think we saw this relatively dovish remarks from the RBA today after holding rates steady at 4.35%. Now, the decision, like you said, was in line with market consensus, also in line with our forecast. We saw the Aussie dollar dropping since last night, so it was markets starting that pricing action last night, also because of the USD took a foot forward last night. So the drop was already priced in before the decision. I think there's one thing we should bear in mind in terms of future rate expectations and the Australian inflation. As the governor herself pointed out, the future rate path will be data dependent. The term data dependent is nothing new, right? But the key lies in the monthly inflation data. The difference between ABS's monthly and the quarterly data is that most services are imputed, meaning price changes are not effectively reflected in monthly data. In other words, we will need to wait for the Q4 data before giving out any definitive assumptions in inflation. But like you said, Brian, overall, this decision should be widely welcomed by Australians, especially as Christmas is just around the corner. It's a relief for now.
Now, on the other side, Australia is always a beneficiary of commodities run up. And we want to talk about one in particular, gold. So gold prices have run up from October. What's fueling this rise, and is it really sustainable?
That's very, very good, Brian. I mean, it was a bit of a shock yesterday morning when it broke. It breached at a historical level and went all the way up. Markets were in the shock. But like you said, I think there are quite a few factors behind this historical run. We get asked a lot by our clients as well in recent days. I think behind this massive increase in gold prices, the first reason is the geopolitical conflict in the Middle East. And the second reason is markets aggressively pricing in for an early rate cut from the Fed. So on the geopolitical front, if we take a look at the chart, we'll notice gold prices started jumping in early October when the war broke out. So the fear trade was very much baked in and was driving market sentiment, lifting gold prices from roughly $1,834 all the way to $2,010 per ounce by the end of the month. Now, that is just under 10% of a gain in less than a month, and Israel's ground invasion marked the peak of that wave. Price subsequently fell towards the low 1900 level until mid-November when the BLS released banal inflation data, and that is when gold started round 2 and eventually made history yesterday morning after reaching 2040 per ounce. But the best part of round 2, I think, is when traders basically ignored what Powell said on Friday and squeezed every bit of dovishness from his speech. No matter what you say, we're going to do this anyway. So yes, the weaker dollar benefits gold, that's for sure. Going forward, I'm eager to see whether this precious metal will hold above the $2,000 stronghold level, Brian.
Now, on that note, Glenn, thank you very much for your insights. Thanks for coming on the show.
Thank you for having me, Brian.
Now, we've been speaking to Glenn Yin. He's the head of research and analysis at AETOS Capital Group Private Limited. Now, this has been Biztech's Asian Midday Market Watch. I'm Brian Fernandez. Check out the show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.